All right, we're about to break down the 10 most powerful AI plays that are slashing costs and protecting margins in retail right now. So let's get right into it.
Okay, picture this. It's Tuesday morning. You're a retail operator and you're pulling up last week's numbers. And you get that sinking feeling, right? It's all too familiar.
You see it right there in the data. Shrink is up, again, 18%. Your best sellers were out of stock during that weekend rush. Customer voicemails had been sitting there for 14 hours. And to top it all off, your assistant manager just burned a whole day wrestling with scheduling chaos. Each one feels like you're playing whack-a-mole. But here's the thing, they're all connected. This is your store. Look, on their own, none of these are five-alarm fires. They're just part of the weekly grind. But when you add them all up, they create this persistent, hidden drain on your business, what we call the slow margin leak. And that leak, it's silently siphoning off somewhere between 8 and 22% of your operating margin. It's not some sudden catastrophe, it's a slow bleed that erodes your profitability week after week. So how in the world do you fix a problem like this? Well, the answer lies in a strategy called AI Retail Operational Excellence. And look, it's about way more than just buying some new software. It's about systematically using AI to plug every single one of those leaks from your warehouse all the way to your front counter. Now, if you follow the money, a pretty clear picture emerges. Inventory and demand forecasting, they get the biggest slice of the pie. And that makes total sense. It's the foundation of any retail operation. But the real story here is that second slice, customer service and voice AI. It's the fastest growing category, and there's a good reason for that. It offers the quickest wins and the most immediate return on investment, which, as you're about to see, is absolutely crucial. And that brings us to the core of this explainer, the top 10 AI plays that are having the biggest impact on the bottom line. We're going to count them down, ranked by their sheer power to move the needle. All right, let's start our countdown. Kicking things off at number 10 is AI returns optimization. Let's be honest, returns are a huge headache and a total margin killer, making up over 16% of all retail sales. So instead of just treating every returned item the same, AI intelligently decides its best next move. Does it go back on the shelf, get resold on a secondary market, or maybe recycled? This simple shift can cut your processing costs by up to 30%.
Moving on up the list, we have play number 9.
AI supply chain optimization. Now this one's a biggie. It's all about tightening up your entire logistics network, from finding the most efficient truck routes to maximizing every single square foot of your warehouse. The price here is a 5 to 20% reduction in costs, but just a word of caution, this is a really complex play to implement correctly. Now for our number 8 play. Predictive maintenance. For anyone in grocery or pharmacy, a single freezer failure can spoil tens of thousands of dollars in inventory overnight. AI uses sensor data to flag these failures before they happen, delivering a really solid $3.20 for every single dollar you spend. And at number 7, we've got the play with the single highest return on investment. It's AI-driven dynamic pricing. And let's be super clear here. This isn't about price gouging your customers. Not at all. It's about intelligently adjusting prices based on real-time factors like demand, what your competitors are doing, and your own inventory levels. It's a surgical approach to pricing. And as you're about to see, the ROI is, well, it's in a class of its own. $6.50 for every single dollar you invest. This is, without a doubt, the highest impact play on the entire board. And frankly, it's probably the biggest missed opportunity for most mid-market retailers today. All right, let's keep this countdown rolling. At number 6, we have computer vision for shrink detection. And the key here, and this is a big one, is that this works with the security cameras you already have. The AI layer on top can spot suspicious activity in real time, flagging everything from return fraud to sweethearting at the checkout. The result? A shrink reduction of up to 32% and a very strong $3.80 ROI. And if you think this is some minor issue, just listen to this quote from a real retail operator. It's just a painful reminder that internal shrink is often the biggest leak of all, and computer vision is the tool that can finally bring it out into the open. Okay, now for our customer service power duo. At number 5, we have AI chat agents for your website and messaging apps. And right next to it at number 4, voice AI to handle all those inbound phone calls. Now, both of these are incredible at reducing costs, but look closely. Voice AI has a higher ROI. So why is that? Well, it's because phone calls are typically the most expensive and time-consuming channel to manage. So automating even a fraction of those calls provides an immediate and really significant cost saving, often within just days of deployment. So let's just pause for a second and look at the heavy hitters when it comes to ROI. As you can see on this chart, dynamic pricing is the undisputed champion at a whopping $6.50. It's followed by demand forecasting at $4.80, and right there behind it is voice AI at $4.20, offering that incredibly fast payback we just talked about. But what does all of this actually look like in the real world? Let's break down a 12-month case study of a mid-market retailer who put these exact plays into action. This is the blue point from a 67-location retailer, and the key takeaway here is this. They did not try to do everything at once. They sequenced it brilliantly. They started with the quick wins, voice and chat AI, to generate immediate cash flow. Then they used that new money to fund the more complex core integrations like forecasting and pricing. It became a self-funding engine for their own transformation. And the results? Well, they pretty much speak for themselves. On an initial investment of just $420,000, they recovered $4.2 million in operating margin. That's a 10x return. And the payback period for the entire project? Just 84 days. So this isn't just some one-off success story. It's a repeatable playbook. Here's exactly how you can sequence your own rollout to create that same self-funding impact in your business. Here it is, the three-phase playbook. You start with the quick wins, things like voice and chat AI, to generate immediate cash. That cash then becomes the fuel for phase 2, where you invest in your core systems like forecasting and pricing. And this order is absolutely crucial because it de-risks the entire project. By the time you get to the more complex, advanced systems in phase 3, the whole initiative has already paid for itself multiple times over. Okay, let's bring it all home. This is the new operational standard. AI is no longer some optional experiment. It is fundamental margin protection. So if you remember just one thing from this entire explainer, let it be this. You are not fighting one big, catastrophic problem. You are fighting 100 small leaks, and AI is the only tool that can find and patch every single one of them for you. The competitive gap is widening every single quarter. So the only question left is, which play are you starting with?